So governments are finally figuring out that sending state secrets over WhatsApp is a terrible idea, and BlackBerry is actually reaping the rewards. Welcome to Earnings Unscripted. It is June 25th, 2026, and today we are digging into Q1 2027 for BlackBerry, ticker BB. It is honestly a surprisingly solid print.
Look, it is bizarrely strong. Top line came in at $152.9 million, which, yes, is down a tiny bit sequentially, but it is up 26% year over year. But the real story is the segments. Both QNX and Secure Comms just smashed through the Rule of 40 metric, which for a company that was stuck in a restructuring phase for a decade, that is massive.
Right. The growth is actually translating to the bottom line. Gross margins are sitting at 78.3%, and adjusted EPS came in at 4 cents, which for a Q1, since that is usually a pretty slow seasonal quarter for them, feels like a major win.
The cash flow is the actual win here. They generated $4.6 million in operating cash. That is their first cash flow positive fiscal first quarter in 9 years. I mean, it is a steep drop from last quarter's $45 million, but Q1 is always their seasonal low point. Just being positive here proves the operating leverage is finally kicking in.
And the market definitely agrees with that leverage story. The tape gapped way up in the pre-market to $9.72, eventually closing the regular session at $10.34, which, by the way, just as a quick legal disclaimer, since we are talking price action, this is purely our personal opinion and absolutely not financial advice. But an intraday gain of over 6% on top of a massive gap up is hard to ignore.
Keep in mind, this stock just had a monster run-up over the last few months. It gained over 170% in the prior quarter alone. Investors usually take profits at that point, but they are buying this growth narrative. They see QNX growing 26% and Secure Comms up 24% year over year, and they are holding on.
Just to step back for a second, some listeners might still think of them as the company that made the phones with the tiny clicky keyboards. They basically just do two things now. QNX is the deterministic safety software for cars and industrial robots, and Secure Comms is what governments use to lock down data. It really feels like that defense side is getting a massive boost from all the geopolitical paranoia lately.
John G. Matteo, the CEO, essentially admitted exactly that on the call. He said governments are starting to realize maybe they should not run top-secret communications on Signal or Telegram. It's an amusing quote, but it translates directly into sticky, multi-year sovereign defense contracts that are inflating their SecuSmart revenues.
It's kind of wild to watch this pivot actually work. But I know you were digging into how they calculate that adjusted earnings number, and you found, well, a little bit of accounting magic in there. Let's get into the details on that.
Yeah, so about that adjusted earnings number, you see that 4 cents and assume it is pure operational leverage, right? But if you look closely at their non-GAAP bridge, they added this, well, it is a brand new adjustment line item for this quarter. They call it the deferred share units revaluation adjustment.
Okay, translated into plain English, what does that actually mean for the math?
It means BlackBerry is taking $10 million in equity price volatility costs completely out of their adjusted earnings.
So if the stock price spikes, the cost of paying out those employee share units goes up, and they're just carving that expense out of the operating picture to look a bit better.
Exactly. It inflates the adjusted EPS. Now, it's not a cash expense, so I understand the logic. But taking equity price swings out of non-GAAP expenses, I mean, it conceals the true overhead of dilution when the stock runs hot. It's optimism with a spreadsheet.
That is, well, it's definitely generous accounting. But beyond the spreadsheet magic, what about the actual revenue quality? Because that secure communication segment looked massive on the headline. 24% growth year over year is huge.
Right, but look at the dollar-based net retention rate, DBNRR. It actually slipped to 92%. That's down from 94% just last quarter.
92% in enterprise SaaS usually means you're bleeding out the back door. Customers are leaving faster than you can upsell them.
yes, a healthy software business wants that well above 100. But what's happening is they're essentially bailing out their own segment with these chunky, massive digital sovereignty deals, like that Shared Services Canada contract. They land these giant government mandates to replace consumer apps, and that completely masks the underlying enterprise churn they're dealing with.
Which perfectly explains why their cash flow went from $45 million down to under $5 million this quarter. They're trading steady enterprise subscriptions for lumpy, unpredictable government deals. Great for the headline today, but structurally volatile.
That's the core issue with the cyber side. But then you flip over to QNX, and the math changes completely. Giammatteo was hyping up the corporate rule of 40, but QNX is practically operating at a rule of 50 internally.
Because they grew 26% and hit a 27% adjusted EBITDA margin. That's a 53. That's insane leverage for an automotive software division.
Yep. It is, and the reason for it is they are not just putting screens in cars anymore. This ties directly into NVIDIA and the whole physical AI narrative.
Right, the robots on wheels concept.
Exactly. Generative AI hallucinates. If a customer service chatbot hallucinates, it is annoying. If an autonomous factory forklift hallucinates, people get seriously hurt.
Or worse.
Right. So NVIDIA is rolling out their physical AI safety stack. It is called Halos, and they are standardizing that entire architecture on QNX, not open source Linux, QNX. Because, and I'm actually going to quote Giammatteo directly here, he said, unlike probabilistic AI systems, QNX technology is deterministic and safety certified, which is exactly why it is so hard to replicate.
It does exactly what it is programmed to do. No guessing, no probabilities. It is a fundamental safety layer. So if NVIDIA wins robotics, BlackBerry essentially gets dragged into the penthouse right alongside them.
They do. And if you want proof that it's actually happening, you do not look at current royalties. You look at development license revenue. It hit an 8-quarter high this quarter.
Why is the dev license the leading indicator? Just because developers have to start building on the platform first?
Exactly. Automakers buy these development tools years before a vehicle ever goes into production. So a massive spike in development tools today essentially functions as a highly reliable predictor for high-margin royalty revenue landing in fiscal 2028 or 2029.
Okay, so this is a long-term play, like a long-term play.
Plus, they're launching that new Alloy Core middleware, which management claims could expand their average selling price by multiples.
By multiples, not percentages, multiples. That's a completely different revenue ceiling. So we essentially have this highly volatile defense communications business funding a massive shift into next-generation industrial robotics. It's a really fascinating underlying story.
It is a strange balance sheet, but the fundamental momentum is real.
Which brings up the obvious question of what this means for the rest of the year. If the momentum is real, we need to see if the management targets actually reflect it. Let's step back and look at the guidance.
They actually do. Management raised the full-year outlook basically across the board. Total revenue is now guided up to $621 million for the year, and they specifically bumped QNX upward to about $312 million.
So they are essentially telling the street that this quarter was not a fluke. The momentum is real.
Exactly. And the most telling detail was from their CFO, Tim Foote. He pointed out that 90% of their incremental revenue is flowing straight through to adjusted EBITDA, which is, well, it is absolute proof that the operating leverage model is working. They're calling for $20 to $30 million in adjusted EBITDA for Q2 alone.
That is exactly the kind of math investors want to hear. But looking ahead, I think the real upside to watch this year is if they actually land a design win for that new Alloy Core middleware. Management keeps saying it expands their average selling price by multiples.
Right, moving them from just a from a baseline OS provider to a full platform provider. That is the absolute bull case. But here is the major unknown I'm watching next quarter. The geopolitical risk.
Wait, friction with who? Like the sovereign cyber contracts?
No, the tension between their two distinct customer bases. They are taking on all these massive, highly sensitive defense contracts for the U.S. and Canadian governments. But they also highlighted on the call that they're winning new robotics design contracts in China.
Oh, I see. Yeah, providing the core foundational software for Western military infrastructure while also powering Chinese autonomous industrial robots. That feels inherently unstable.
It is a massive geopolitical liability. Software supply chain walls are going up everywhere right now. You cannot easily straddle both sides of that divide indefinitely. At some point, a Defense Department might start asking very pointed questions about where else your architecture lives.
That is such a fascinating point and definitely the key tension to watch next quarter. But honestly, just taking a step back, the fact that a company everyone wrote off years ago is now juggling the Rule of 40 alongside global robotics software supremacy, it's a wildly impressive comeback.
It really is. Credit where it is due. They actually built a functioning engine. Now we just have to see if they can navigate the traffic.
Let us hope they have their own QNX safety software installed for that. All right, I think that's a perfect place to leave it for BlackBerry this quarter. Thanks for digging into the numbers with me, Miro.
Always a pleasure. See you all next time.
If you want these conversations to just naturally show up in your feed, you might want to follow the podcast. Just as a transparent aside, this show is an AI-assisted project exploring how synthetic voices and real human pacing can make dense financial filings genuinely fun to listen to. We'd love to hear what you want us to cover next, so just drop a note to earningsunscripted@datamadness.ca or use the X link in the show notes. Thanks for hanging out, and we'll catch you next time.
See you then.